How to use the bottom fishing pattern head and shoulders bottom. Highlights 1. The advanced subject of futures trading, GateLearn, aims to help users build a framework system of technical analysis, including candlesticks pattern fundamentals, technical patterns, averages, trend lines, and the application of technical indicators. 2. In this issue, we will explain the application of the head and shoulders pattern regarding its concept, characteristics, BTC application, and relevant precautions. What is head and shoulders bottom? The head and shoulders bottom forms after a downtrend, with its completion marking a change in trend. The pattern contains 3 successive troughs, with the middle trough being the deepest and the 2 outside troughs being shallower. The left shoulder, head, and right shoulder respectively go from left to right. Let's take the September 2021 Bitcoin price chart as an example to illustrate the characteristics of the HNS bottom. BTC fell from $52,000 to $39,600 in just 3 weeks, with a cumulative drop of 23%. After that, a compound HNS bottom structure was formed near $39,000, and then the currency price pulled up to break above the neckline and then retraced while remaining to rise, finally rising to $67,000, with a cumulative gain of more than 60% in 3 weeks, forming a strong reversal trend. By simplifying the complex candlesticks pattern through technical analysis, users can see the relative positions of the left shoulder, head, and right shoulder, as well as the neckline connecting the 2 shoulders. Let's study the specific technical characteristics of the head and shoulders bottom.
One, the price must be in a significant downtrend before the beginning of the formation. 2, when the declining trend ends, the prices will dip into 3 lows, forming 3 troughs. Among them, the lows of the left and right troughs are basically at the same level, called left shoulder, right shoulder. The middle trough is significantly lower than the 2 shoulders, called head. 3, the highs of the left shoulder and right shoulder rally are the same, and the horizontal line connecting the 2 highs is called neckline. When the price makes the final rally, it breaks above the neckline, indicating that the head and shoulders bottom is formed. 4.
When the price breaks above the neckline, the corresponding volume should be significantly enlarged, otherwise it may produce a false breakout. After understanding the technical characteristics of HNS bottom, let's study when to buy and sell in actual trading. Firstly, taking the neckline as the bull and bear index, the area above the neckline marks the rise of the long advantage area, and users should buy for the rise, not sell short. Below the neckline is the down short advantage area. This range is suitable for short selling, and should not buy up.
5. Head and shoulders bottom entry point 1, price breaks above the neckline. When the HNS bottom pattern is set up, the candlestick breaking above the neckline is a rising green candlestick as shown in the figure. The candlestick entity passing through the neckline marks a bullish signal, which means that the position forms the first buying opportunity. Once the pattern is formed, the market is expected to rise.
6. Head and shoulders bottom entry point 2, after breaking above the neckline, technically retrace the neckline. When the price breaks above the neckline, it will slightly decline, and then rise again after retracing to the neckline. We call such a price change retrace to confirm support. Retracing the neckline creates the second entry point. 7. Head and shoulders bottom entry point 3, breakout of previous highs. When the HNS bottom is formed, the price continues to rise, and after breaking through the previous high, the candlestick closes a positive line with the high above the previous high, thus forming the third entry point at this time. 1. Summary of the technical meaning and application rules of the HNS bottom. The first point to confirm is the 3 important technical features of the head and shoulders bottom: the left shoulder, the head, and the right shoulder. Also keep in mind the neckline, the important bull and bear reference line. Accompanied by the continuous changes in the market, we find 3 entry points. 1. Breakout of the neckline entry point 1. 2. Retracement of the neckline entry point 2. 3. Breakout of the previous high entry point 3. 2. Compound head and shoulders. Due to the turmoil of the entire crypto asset market, there are very few standard head and shoulders patterns, while in the actual market, irregular head and shoulders or compound head and shoulders patterns will occasionally happen. Appearing at the bottom, it indicates the end of a downtrend and the coming of an uptrend. Appearing at the top, it indicates an uptrend's end and a downtrend's onset. We know that a head and shoulders bottom is a reliable technical pattern that indicates a bullish market. However, the market is always full of uncertainties and risks, so when the following pattern appears, you need to leave the market decisively even if it is an HNS bottom pattern. The head and shoulders bottom pattern is formed when the price of a currency rises against resistance, then falls and breaks above the neckline. As shown in the chart, the down candlestick closes with a solid negative line and breaks above the neckline, which is the harbinger of the coming stock plunge. Usually, there will be a second rally to the neckline in the technical pattern. If the rally did not break above the neckline and cannot break the previous high, this will be the best time to sell. Otherwise, the ensuing plunge will make you suffer severe losses. A smart investor should not only sell cryptos when making money so that profits are maximized within the known range, but also should sell cryptos when losing money, ensuring that losses will be minimized to a controlled range. 3. Summary. When a head and shoulders bottom pattern appears at the bottom, it is generally a more reliable bullish signal and may mean a reversal of the trend. Since the trend has inertia, a confirmed trend will generally continue to run in the direction of inertia, so a neckline break is a real buy signal. Note that futures trading can take a while to perfect. Practicing what you learned will make you more proficient in the contract market. Click on the Gate.io contract platform and register to start your futures trading journey. Disclaimer: this information is for your reference only. The information provided by Gate.io above is not investment advice and is not responsible for any investment you may make. The information regarding technical analysis, market judgments, trading tips, and traders sharing may involve potential risks, investment variables, and uncertainties. This issue does not provide or imply any opportunity for guaranteed returns. * Crypto investment involves significant risks. Please proceed with caution. The course is not intended as investment advice. * The course is created by the author who has joined GateLearn. Any opinion shared by the author does not represent GateLearn.